Okay, so you're running a business here in the UAE, and just hearing the words VAT registration probably makes your head spin, right? It can feel super complicated, maybe even a little stressful. But guess what? It doesn't have to be. We're going to break it all down for you, nice and simple.
This is it, right? The big one. The first question everybody asks. Do I really need to do this? Does this even apply to me and my business? And right after that, you're thinking about timing. Like, when do I need to register? Is there some kind of deadline I'm about to miss? What even kicks this whole thing off? Trust me, knowing when is just as crucial as knowing if.
And then, of course, the scary one. What happens if I just don't, or if I get it wrong? Okay, deep breath. We're going to tackle all three of these questions right now and make it all crystal clear.
All right, first things first. Let's get the basics down. When we say VAT registration, what are we even talking about? Because it's way more than just filling out some forms. It's a pretty big shift in how the government sees your business.
So, at its heart, it's actually pretty simple. VAT registration is just the official way you sign your business up with the Federal Tax Authority, the FTA. It's basically you raising your hand and saying, "Hey, I'm here," and getting formally on their radar.
And once you do that, your business gets this official title, a taxable person. And no, that's not just a fancy name. It comes with a whole new set of jobs. You get the green light to charge VAT on your sales. Then you have to collect that VAT from your customers. And finally, you have to report it all and hand it over to the government. Yep, you pretty much become a tax collector for them.
So, what's the proof you've done all this? Well, you get a unique tax registration number, or TRN for short. Think of it like your business's VAT ID card. This little number has to go on all your invoices, and it's your official tag for anything and everything related to VAT.
Okay, so now for the million dirham question. Do you need to register? Well, the answer really comes down to which of two paths your business is on.
You've got two main types, mandatory and voluntary. Mandatory is exactly what it sounds like. You have to do it once your business hits a certain big number in sales. Voluntary, on the other hand, is an option for smaller businesses that hit a lower number. And here's a really important little detail. You can register voluntarily based on your expenses, not just your sales. That's a game changer for some businesses.
So how do you figure out if it's mandatory for you? It's easy. You just run two little tests. First is the historic test. Just look back over your last 12 months. Did your sales go over the limit? Simple. Second is the future test. Look ahead. Have you got contracts signed or big orders coming in that are definitely going to push you over the limit in the next 30 days? If you answer yes to either of those questions, then boom, you have to register.
And what is that limit I keep talking about? Here it is, the magic number, 375,000 dirhams. The second your taxable supplies cross AED 375,000 in a 12-month window, it's not a choice anymore. It's a must-do.
Okay, what about the voluntary option? That threshold is lower. It's set at 187,500 dirhams. And don't forget, this one's flexible. It can be triggered by your sales or your business expenses. That's super helpful for businesses that spend a lot of money up front on things that have that on them.
But wait, why would anyone sign up for this if they don't have to? Great question. Well, a lot of startups and growing businesses do it. For one, it makes them look a bit more official. But the big reason is so they can claim back the VAT they've paid on all their startup costs. If you've spent a ton on equipment or rent, registering voluntarily means you can get that VAT money back in your pocket.
All right, so we've got our numbers, $375,000 and $187,500. But what exactly are we counting to get to those numbers? This is where the details really matter, so you gotta get this right.
Okay, so what goes in the calculation? You're going to include all your standard and zero-rated sales. Now, zero-rated might sound weird, but it just means things that are technically part of the VAT system, they're just taxed at 0% for now. You also have to count any goods and services you've imported. And here's where people trip up. You also have to include sales from any business you recently bought or even sales between your own related companies. It all gets added to the pot.
And just as important is knowing what to leave out. There are two big things you don't count. First, exempt supplies. Think of things like certain financial services. Second, out-of-scope supplies, which are things that aren't even part of the UAE VAT world. If you accidentally include these, you might end up registering when you didn't even have to.
Now hold on, there is a huge, massive exception to all these rules.
If your business is not based in a GCC country, but you're selling stuff here in the UAE, then those thresholds, the $375,000 and the $187,500, they go right out the window. You have to register no matter what your sales are. That is a really, really important point for any international companies.
Okay, so we've covered if you need to register and how to calculate it. Now for the really important part. When do you do it? And what happens if you don't? Because when it comes to taxes, deadlines aren't suggestions. They're serious, and missing them can really hurt.
The second you cross that mandatory 375,000 dirham line, a clock starts ticking. From that exact day, you have just 30 days to get your registration application over to the FTA. And trust me, that is a hard deadline.
And the government is not kidding around with this. This isn't one of those things you can just say, oops, and fix later. If you miss that 30-day window, there's a pretty hefty penalty waiting for you.
So what are the stakes? A flat penalty of 20,000 dirhams. Ouch. That is a huge price to pay for just being a little late with your paperwork. And that's exactly why you have to keep a close eye on your numbers all the time. It's just smart business.
Okay, so let's boil this all down to the key takeaways. Number 1, it's mandatory if you go over 375,000 dirhams. Number 2, you can choose to do it if you're over 187,500 dirhams in sales or expenses. Number 3, timing is everything. You've got 30 days once you hit the mandatory limit, or else you're looking at a 20,000 dirham fine. And last but not least, remember, getting registered is just the start of the journey. After that comes the fun of filing your VAT returns.
Look, getting a handle on registration is the first, most important step. It takes VAT from this big, scary, confusing thing and turns it into a clear set of rules you can actually follow. So, now that you've got this solid foundation, the real question is, are you ready for what comes next in your VAT journey?